Few months ago, someone who follows me next sent me this message. Hi Gaurav, regarding force motors, I saw you entered as a swing, but later you moved it to the core. What was your thought process? I buy a stock thinking long term, but later when it goes up 20%, I get worried and sell it, and it keeps going up. You instead added more and moved to the core. Your response will help. Thank you. When I read this message, one thing was very clear to me that this is not a stock problem, this is not an entry problem, this is more related to the portfolio structure problem. And more specifically, when you start treating swing trade as a core trade or a core trade as a swing trade. And that is why a lot of people they overtrade or sometimes kill their good running stocks too early, or they simply keep their capital stuck in a stock thinking that a stock is a core stock, but that stock never moves up. Before I go further, quick introduction. Hey everyone, my name is Gaurav, and my entire objective is to create a repeatable process or system which can be applied in real market by eliminating noise and randomness. So the key objective of this video is to break down the different timelines people operate on this market and how simple core versus satellite structure solve this problem. So let's break it down. So before we talk about a strategy setup or even portfolio, there is one thing which matters a lot. So where do you operate on the market timeline? Because everyone in the market is participating somewhere from short-term trading to long-term portfolio holding. Most people struggle not because they have a bad strategy or they are bad stock picker. They are mainly struggle because they don't understand on this timeline where do they sit and whether the temperament matches to their strategy or not. So let me walk you through from left to right. The first one is intraday or scalping. So here trade hardly lasts for minutes or few hours, right? Everything you close it in same day. And here you are basically looking for extreme fast execution, extreme risk control, and ability to sit in front of a screen for long hours. So if you are not good in managing your risk, if you struggle cutting your losses, then obviously this strategy is not for you. Some of the traders like Larry Had, Jesse Livermore, or even the prop firms, they operate in this area. Okay. As we move slightly to the right, we enter the momentum burst zone. So here trades usually last a few days. The idea is very simple. When a stock breaks out, it often gives a short or fast move. So maybe the burst of let's say 3 to 7%. You are typically trying to catch those that range of return from 3 to 7% in let's say few hours to few days, probably 2 or 3 days, where the stops are very tight, exits are fast, and trades are not meant to be held for long, right? And it suits for the people who want action and they don't want to sit for all day like intraday traders. And like Pradeep Bond or Christian Kulamagi, these people they operate in this zone where they allocate very high and they simply look for a quick burst of 3 to 7% and they exit immediately. Now we come to the swing trading. So here the holding period expands to few weeks, or sometimes a couple of months. So your trading time frame is mainly on daily chart. This is where the structure starts to matter more than the speed. So you look for a lot of setups where a flag pattern, VCP pattern, and these things comes in picture. Swing trader usually focus on clean trends, proper setups, and trailing trades using daily indicators like EMA on daily chart. Now, this style is less stressful than momentum burst, but far less noisy than intraday trading. And you don't worry too much about 1 or 2 day moves. You look for a trailing mechanism using daily MA. Hence, you try to capture a good piece of trend. So, a lot of traders like Paul Tudor Jones or Mark Minervini, these traders they operate in this zone. The next one is core position zone. So this is where the trade lasts for several months, okay, sometime extend into years. Here the focus mostly on weekly charts. You're not worried about daily charts or daily moves. And here you incline more towards the fundamental or catalyst or earning side of it, because since you wanted to hold it for long period of time, multi quarters, multi years, you are not worried about too much of price action. You are totally aligned towards the fundamental side of it, and you're using technical just to time your entry or exit. So this style basically requires patience, convictions, and ability to do nothing while the stock works. Like William O'Neill or Peter Lynch, they do operate in this zone. And the last one is coffee can or business ownership, where you tend to hold the stock for 5 year, 10 years, or couple of decades, depending upon how the business works. This is where the lot of value investor comes in, and the valuation matters most for them. And this style is very simple in concept that you buy strong businesses, you hold them, and do very little for long period of time. So, for example, Vijay Kedia, Anil Goel, these are the big investors basically who tend to hold the business for long period of time, and they operate in this zone. So once this timeline is clear, now let me bring this back to me. So I have tried multiple styles over the time, and one thing has become very clear that I do not enjoy hyper noise. I hate noise, and that kind of trading, like intraday or momentum burst will drain me more than it helps me. But at the same time, I just don't want my capital to sit idle for multiple years or multiple decades. So I need something in between. And this is where my operating zone comes in. So these are the two areas where I operate in. So my satellite, which I call it, where my 20 to 30% allocation happens, it's in the swing trading. And then rest of my 60 to 70 goes into the core, which is in this. So when I want momentum, but I want it with a structure, I move into the swing. But when I want some earning catalyst and for multi-bagger stocks, which I can hold it for some decent period of time, multi-quarter, multi-years, I go into this zone. Now, once this become clear, everything else will fall into place. My screening, my entry, my exit, I will exactly know how to operate it. Now, what are the key characteristics of core and satellite? So let's quickly go into that. The first one is objective. Every portfolio has two main characteristics, right? One is you protect and compound your capital, which is I call as a core, right? And the second one is you grow your capital faster when the market supports. So basically swing trading. And this is the main reason for me to segregate my portfolio in this way, because I want some part of my portfolio to compound with a decent CAGR in long period of time, and then certain portion of my portfolio I want that to be compound faster. Keeping that in my mind, I basically call core when I am looking for a long term CAGR of around 15 to 25%. That's my objective. For satellite, I'm looking for 100% year on year. Now, before anyone jumps to a conclusion, let me be very clear. When I say capital acceleration of 100% every year, this is not a guarantee, or this is not a sure shot I'm promising that I'll get in my portfolio every year. This is something is my goal to achieve if the market supports, right? So for example, last year the market was pretty much choppy. I have not achieved that return, which is 100%, but this is something I aim for, I strive for, and that's my objective of my portfolios. And this helps me to choose my stock accordingly. So I don't want to be a part of a stock which is a slow mover, whose ADR is, let's say, less than 2 or 3%. And that is why it automatically forces me or aligns me to those stocks where the momentum is high, where ADR is high, where the chances of movement is quite big within a small period of time. With this, let's go to the next one, which is a strategy mix. So once I've defined my objective, my strategy mix become very simple. So the core and swing are not two random buckets for me. They serve totally different role, and hence the entire strategy is quite different. So for core, my most of my mental energy goes to business quality, earnings, leadership, sectoral tailwind, lot of fundamental analysis. So these things, comes in a picture. Versus swing, which is more of a price, momentum, execution, setup, most of the technical side of it. So that is why I say 80% technical versus 20% swing, 20% fundamental for swing, versus 70 to 80% fundamental in core, and just 20 to 30% technical. And just one point I wanted to add before I move ahead to the third one, because since I have segregated my portfolio in a this way, where I have some calmness using the core, whereas but some aggressiveness using the satellite or swing. When the market is choppy or bad, immediately sell my 30 to 40% of my portfolio immediately, and I have cash immediately available without impacting my portfolio much. But I leave my core as it is because it's a fundamental oriented. And during the bad market, or when the market is pretty much choppy, it helps me to add more into the core without impacting overall my portfolio. And that's the best benefit I can get from core and swing trading segregation. With this, let's go to the third one. The third one is mindset. Now, this is the most important or most critical part of entire discussion today. And that is why this portfolio structure might not suit for everyone. And you have seen a lot of people in the market, they are 100% swing trader, or they are 100% fundamental trader, and they are not okay to adapt or learn technical or fundamental based on their preference. That's because the slide. So most people generally fail not because of strategy, because they bring a wrong mindset to the strategy. So you have two types of brain, right? One is left brain and right brain. Left brain is basically the logical side of it, where logical, analytical, process oriented, brain, whereas right brain is more of a creative, research oriented brain. And that is what exactly this portfolio structure is also. So you need to possess both side of the brain. Core requires a lot of patience, execution, required a lot of research, and ability to sit through boredom, right? Versus your swing, which requires a lot of logical, requires speed, decisiveness. You need to have a process, the steps. And that is why if you mix these two mindsets, it will create a big damage to your portfolio. So you cannot manage a long-term position with a short-term emotion, and you cannot trade momentum if you hesitate. And that separation is very important. Hence, you need to have a clarity of mindset. And if you want to have this portfolio structure, then you have to define which mindset you operate in. Ideally, you should have both mindset. You should learn fundamental as well as technical and apply both to get the best out of this market. So next one is timeline. So for core, we tend to hold it for month, quarters, years, sometime multi years. So one of my stocks, Silchar, I've been holding for more than 3 4 years now. Versus satellite is about churn rate. So here the frequency matters more than the quality of stock which you're owning in satellite or swing. And that is why your frequent entries, frequent exit, and hence it requires high churn rate. Okay. And neither is better or worse. This is how it operates. It's all that you have to adapt accordingly. The next one which I have is allocation. This is where the real risk shows up. So for the core position, we want a smaller position initially because we are trying to hold it for the long term and it's more of a fundamental bet. We don't know whether our fundamental thesis will work or not. Hence, I generally tend to start with a lower allocation of let's say 2 to 3%. Okay. And I scale it up to max 7 to 10%. And I tend to spread across the market. So currently, for example, my portfolio is spread across pharma, infra, capital goods, finance, few more sectors. And that is why I never hold more than 10 to 14 stocks in a core versus satellites, which is fewer in number for me, right? So I allocate around 30 to 40% in the satellite immediately. And max to max position size for me is 20 to 25% per trade, right? And hence I never have more than 3 stocks in swing or satellite. So in nutshell, for swing trading I play very concentrated bet versus core where I have decent diversification of around 10 to 12 names, sometimes 14 names. The next one is screening. You can't be screening core using a satellite parameter, and you cannot screen satellite stock using the core parameter, right? So for core, I look for earnings. Catalyst is very important. Canceling parameter. I also look for the peed candidate. This is something which I learned 3 4 years back, and I have been using for a while now. And it really gives some very good candidate if you know how to use it. So I'll make a separate video on this one, but I use speed as one of my filter criteria. I look for the market leader. So basically, if there is a small company in a big opportunity, a big pond, right? And demergers. Demergers I rarely play. The last I played was Jubilant in Grivia and in Jubilant Pharmova. But then I rarely play this one. But for satellite, my scanning or screening mechanism is totally different. I rely more on for technical side of it. So something like 52-week high, probably 1 month, 3 month, 6 month high, 30% move in 3 month, and the frequency of your scanning will also differ. So for core, I do weekly or bi-weekly scanning. But for satellite, I tend to do generally daily. The next one is entry. For core, I often align with a weekly chart or weekly structure, and I look for 52-week high. I've already discussed in detail about my entries in this video, so you can check that out. But for satellite, so I look for a lot of anticipation entry. I look for daily range breakout. I look for 11 or 21 DMA. Pocket pivot is very important for me. So these are the few characteristics which I look for satellite for to make my entry. For swing also, I have made the video, so you can check that out. Now, this is where the disciplines comes in. So exit and trail. I've kept it very simple. So for core, it is fundamental thesis. So when you are entering into the stock and core, you create a thesis, right? So this is the key catalyst. This is something will happen in next 2 or 3 quarters based on your research, con call, and everything. Now, if those theses are not being respected by the company or by the market, then you simply exit it. Or if you do not understand the fundamental very well, then we can use a technical like 11 weekly MA and you can exit the stock. But in for swing or satellite, if my SL is 4% or less than 4%, when it hits, I immediately exit. No questions asked. Or and if the stock moves in your direction, then you simply trail 11 or 20 volt daily EMA. And the last segregation which I want to talk about is statistic. You will notice for the core, I look for the multibaggers, and here the losses are controlled. But for satellite, loss I cut immediately. So my worst case loss is 4.5%. An average win and loss here, I generally look for 3 to 4 versus 1. That is the best case scenario. Just to summarize, this is what my core and satellite looks like. This portfolio structure is not being aggressive all the time. It's knowing that when you need to really push hard and when you need to sit back and protect your capital. Now, let me quickly explain with an example. Sometime what will happen that you identify a stock as a swing trade or satellite trade, but when you do research, it moves into core. So basically, I'm trying to explain you how the thought process will work. So in April, when I was running through a scan, I identified this stock as a swing trade. Okay, so it has a good uptrend, good pullback to its EMAs, and then there is a tight consolidation. This inside bar became my trigger point, and anything above this inside bar, I would have entered. So this was my entry point around 8846, but I got my bid accepted around 9043, 9045. Okay, so on 21st April, I entered, and then few days it didn't work, it did anything, it just do a tight consolidation. And when the result came in, I immediately looked the result, and result was really good. Okay, so there was a tailwind of OEMs, and overall result was very good. Then but this there was no reaction in the stock, so but it has not breached 11 EMA, so I don't have to worry. And then on 2nd of May, stock moved 12% immediately. Stock within a few days, it has moved more than, I think, 15-20% from my entry at this right. Yeah, 20% from my entry, and I started pulling back. So now stock is extended from its 50 MA. But when I was researching the stock fundamentally, I know the fundamentally the stock is really good. Keeping that in my mind, I immediately moved the stock to core, right? So what I did, I booked some portion here, and now at this point, I started trailing the stock using a weekly chart, and then the stock has given 2x in short period of time. This is how your thinking should work. Okay, from example perspective, sometimes you enter into stock as a satellite or swing. You do a fundamental research, you look for catalyst, and that stock looks very interesting from fundamental point of view. Instead of booking everything, you immediately move it to the core, and then you trail the EMAs. The biggest edge in the market is alignment between your temperament, between the stock picking strategy and your portfolio structure. Majority of us, we lose money because we try to operate in a part of market which doesn't suit us, and that is the most important part for you to understand. If your temperament is to book 20-30% and you struggle to hold for 3 or 4x, then definitely your portfolio should have major portion of swing trading. And if your temperament is not to trade too much, then in that case, your portfolio structure should align to that temperament, and you should have more of a core portion versus swing portion. So that's it for this one. See you in the next one. Bye.